the rand is diving into this weekend. It's hit a 13-year low today. We'll speak to Investec in a moment. And later, new research suggests that young women don't see anything like glass ceilings. They see incredible opportunity in the world of work, and they're asserting themselves. We'll look at women at work ahead of International Women's Day. Now, let's start with that currency, the rand plunging to a 13-year low. Just a short while ago, it was trading at 12.08 to the dollar, a level of weakness last seen in 2002. That's after jobs data that was very encouraging for the U.S. economy was released in America and boosted the dollar. The dollar climbed to an 11-year high today after that payrolls data was released. So the U.S. created 295,000 jobs last month, which was much more than expected. The unemployment rate fell to a 6.5-year low of 5.5%. Investors are trying to gauge the health of the U.S. economy to predict when the central bank will have the ammunition it needs to raise interest rates. The economy needs to be strong because such a move could dampen growth a little bit. Economists now expect the Fed to signal its openness to a June interest rate hike while dropping its pledge to be patient in considering those lifts. U.S. data has been mixed so far this year, but the jobs data consistently improving. An increase in U.S. rates will make the dollar more attractive due to higher yields. The rand perhaps losing some of its allure. It's already a riskier currency for investors. Well, joining me now on the line from Cape Town is Malcolm Charles, Portfolio Manager at Investec Asset Management. Thank you for joining us, Malcolm. Put this level in context for us. I was looking, 12.06 in 2001. I think if we go a year earlier than that, the rand got to 12.19. So are we heading to an all-time weak level?
Look, I think there is a possibility that the rand goes into a little bit of a wobble and continues the free fall that we've seen this afternoon. But I think we must stress it's very different to 2001 when a lot of it was a rand-specific story. This is very much an emerging market FX story. We're not alone. All emerging market FX countries have been hit today. Turkey, Brazil, Russia, ourselves. Everyone's been hit the same sort of quantum. And that's, as people are pricing in that money is going to flow back or continue to flow back to the U.S. economy, as they are probably showing the best signs of growth out there. So they're growing faster than everyone else. They'll be a more attractive destination for money. And, who's been the recipient of all the money that's flown out is emerging markets over the last, 4 or 5 years. So it's a reversal of fortunes of the last couple of years.
Explain further for lay people why U.S. jobs data is a huge weight on our rand. And you're talking about this reversal. How long is this time period? Will the rand continue to weaken? Will we get to a stable level? What do you expect?
No, I think the rand will find a level pretty soon. This is any market when your central bank decides to change direction of interest rates is always the most nervous because people are trying to anticipate. And as you mentioned in your intro, the market was expecting rate hikes in the U.S. Closer to the end of the year. And now suddenly a June rate hike is on the cards. So it's been brought forward 3 to 6 months. That's a big change to expectations, and that changes the risk factors in the very short term. So any investor who's looking to put their money in and you can choose between all different markets, you start looking for economies that are going to show more growth. And at this stage of the game, the U.S. is the game in town. They're going to potentially give you the best possible return, so they're going to attract that money. Does the rand go to free fall for months and months? No, because once the market prices in the June hike, it was caught unawares by today's number, and it would have been caught unawares with a June hike. Now it can price against it, so all prices are adjusting, as we've seen quite violently. But if the rand, maybe we go another 10, 15 cents. But then we should see a bit of stability coming back to the currency.
Malcolm, they used to say when the US sneezes, the world catches cold, then things seem to get more complicated. But looking at this reaction today, we're still, as one of the emerging markets, you do say it's an emerging market story, we're still so tied to the fortunes of America, aren't we?
Absolutely, but the nice thing is the US is not sneezing today. It's actually growing. It's actually getting better, and the global economy needs. And it would be nice if Europe could also come right, because then we would start, as emerging markets, start benefiting from that growth from our exports, and net that will be a very good outcome. So this is just a readjustment to normalization of interest rates. We also forget that we've had very low and in some places negative interest rates for a long time. That is not normal. So this is the economies and the markets are learning to walk again. Central bankers are dominated, and now it's just investors having to sort of adjust to more normal environments. If the Fed hikes in June, it's likely that our own Reserve Bank will probably follow with a rate hike end of this year, beginning of next year, which then will stabilize. And if they come out with words of that effect at the next MPC meeting, that also will lead to a bit of stability in the currency. So, I think that this is just the adjustment happening for the stronger data, and we should see some stability returning in the weeks ahead.
All right, thank you for giving us that context, Malcolm Charles from Investec. Well, let's take a look at the number. The rand still trading well above 12 rand to the dollar. Meanwhile, on the JSE, the gold miners fell by more than 4%, but the market still managed to end the week higher with some strong gains among industrial stocks. Here's a quick look at your main financial indicators, starting with that beleaguered currency.